the screen right now, there are some QR codes here. You can take this time to register for the free demo accounts available here. So tonight, the products I will be discussing will be available on MT5 platform. So you can go ahead and just scan to download the demo platform. All right, so I'll talk to you at 7:02 again. Okay, good evening. Thank you everyone for finding time to attend tonight's webinar on Get Ready for the Markets in 2021. This is Charmaine Tan speaking, your presenter for tonight. So before I start, I will assume that most of the audience tonight would have some form of investment or will be looking to add some of the products that I will be mentioning to your investment. So for tonight's session, the topic for discussion we will highlight on Nasdaq 100, S&P 500, Dow Jones, crude oil, and as well as the gold markets. So I will try my best to cover as much as I can and to assist you in understanding the ever-changing market condition. But webinars like this can only assist you that far. I will still strongly suggest that you engage a broker to help you keep track on your investment portfolio. Now, during the webinar, if you do have any questions, do type them in the question box and I will address them from time to time. And so let's do a sound check. If you can hear me, please just help me to type a yes in the question box. All right, yes, okay, good. Thank you for responding. So let's begin tonight's webinar. Okay, so for the benefit of those who are listening to me for the first time, just allow me to do a brief introduction. And so I'm a licensed representative with MAS, and I have been in the industry for more than 10 years. So during these 10 years, I've seen and experienced many types of market movement and how trading has dramatically shifted from pit trading to now electronic trading. So with new investors or new traders, when they approach me, first thing first, I usually will have to assess their investment portfolio as well as to study their risk appetite and then recommend the type of trading strategies that can match their lifestyle, which is very, very important. As you know that a lot of people, they don't want to be focusing so much on investing and looking at the market while they still have their jobs. So really looking at how to balance out their portfolio is very, very important. So, of course, investors, they will suggest about their strategies with me. And through these discussions, I can spot like loopholes or potential pitfall if I see that they invested very heavily in one basket. Okay, so twice a month, I have live Zoom coaching session with my investors where we will meet to discuss about the current market situation and which market to be focusing currently. So these Q&A sessions are for investors under my care where they might feel stuck or not sure how to look at the market a few months down the road. And so far, these sessions have been proven to be quite beneficial in aiding them with their trading strategies. Okay, so let's start with what happened this whole year. Like it just went past so quickly. So let me just do a rundown what has happened in 2020, and pretty much in a nutshell. Number one, overheated technology stocks, which I will show you later. Number two, US election. Really, really very uncertain right now. Positive COVID-19 vaccines development. Finally, a good news. Dovish central banks, okay, and ongoing economic recovery, but a bit slow, and this will help the equity markets to push higher. So let's look at US unemployment rate first. All right, so the unemployment rate dropped to 6.9% in October from the previous month, 7.9%. Okay, so still the jobless rate remain well above pre-pandemic levels of about 3.5%. So the labor market recovery from the COVID-19 shock shows signs of slowing because of the lack of fiscal stimulus. And of course, we know there are new lockdowns because of the new coronavirus infections happening again. All right, so which means that fiscal stimulus are still not enough. Okay, now the next data to take note is GDP. All right, now this is percentage change from preceding quarter. As you can see, it increased to an annual rate of 33.1% in the third quarter. So why is because government efforts, right? They have already pumped in about 3 trillion, okay, of package to help out the economy, all right, to continue to reopen businesses, the small ones, and to resume activities that were postponed or restricted due to the COVID-19. All right, so that's why you can see that it kind of increased. All right, so this is what happened. And going forward, the key drivers for market performance, if you follow my previous market update 2 months ago, it's essentially the same key drivers. We're still looking at more COVID-19 vaccines to be developed and to be distributed. All right, of course, US-China tensions are still there. And of course, what is going to unfold from this election. So I'll go through them part by part. All right. Now, for the COVID-19 vaccines, so far, we have positive news from Moderna. They have already submitted for emergency approval in US and UK. So now the governments are discussing like who will get the vaccines first. So not only Moderna, Johnson & Johnson is very, very close to achieving 95% effectiveness in the human trials. So, you know, these are just two. Of course, the rest, they are coming up. But as what they have predicted, like they should roll out the first batch before this year end. All right, so with positive vaccine development, we can see economic activity resume as early as next June. All right, if everything goes in place. Okay, so now what's next for US president election? All right, now we know that finally Biden is the president-elect. Okay, so this is the timeline we need to take note. December 14, this is the Electoral College representatives. They will cast votes. All right, and then of course 6 January is the senators, and then the inauguration will be in 20th January. All right, so now President Trump, all right, he's still the president, has not conceded, and his legal team will continue legal actions towards the key states. All right, now the focus now shifts to the Senate race, where the control of the upper chambers in the US Congress remain undecided because the Democrats and the Republican seats are tied 48 seats each. All right, so the key to the race will be Georgia, all right, and that's on the 5th January, right, because no single candidate managed to win more than 50% of the votes required by the state laws of Georgia. All right, okay, so we look at Joe Biden, the US president-elect. Okay, now his team moved very quickly to build a diverse administration, and they have announced all-female senior White House communication team, which is pretty okay. Biden will also name a diverse economic team with 3 women on top roles to aid recovery. So what is Mr. Trump doing? So he has already started legal proceedings with the key states, and he went to courts alleging that the Arizona voter fraud. Yeah, so hearing is still ongoing, all right? So Trump's team is providing evidence. So we are still waiting for more developments from the Trump's camp, okay? But so we can just take it like we just focus that, okay, Joe Biden is the US president for 2021 and onwards for the next 4 years. So we look at his policies, what did he propose, and we can from there look at how it will pan out in the economic performance. Okay, so we take a recap on what he says. Okay, the key issues that is close to their hearts. Number one is coronavirus. Okay, he proposed national tests and of course a trace program. All right. Number two, jobs and money, which is very, very important because we want to know what's their stand. Number one, they will want to raise the minimum wage, all right, to 15 US dollars per hour. All right, this is the minimum wage. And of course, he is also looking at extending loans to small businesses, and of course, to increase the monthly payout for the Social Security payments, to 200. All right, and of course, he wants to invest in green energy. So he has already budgeted 2 trillion investment in green energy. So boosting green manufacturing. Okay, this will help working class union workers. All right, they will perform the majority of those jobs. So we can actually look at green energy technologies companies, all right, moving forwards. All right, and next is for climate change. All right, he proposed to spend 1.7 trillion investment, okay, on, like I said, green technology. So this is a little bit overlaps in research, okay. So this is which is essentially very important for us because we can see that his focus is really on spending on green technologies. So which means that this the green technologies companies are listed in S&P and NASDAQ. So it would be good that we look through some of the green technologies companies listed in the S&P 500 and NASDAQ and track their performance. Okay, now for foreign policies, of course, he proposed coalition rather than unilateral tariffs, okay, in hopes to repair the trade relationship with US allies. All right, so if all these policies are in place and if he is still the US president, this should bring US economy up in 2021, earliest by June. Okay, because having said that, we still need the vaccines to be distributed out. Okay, so having said that, let's look at the current markets and then we can look at how the outlook for in 2021. All right, so we start with NASDAQ 100. All right, now this is the top and best performing asset class. Okay, now why? Without doubt. Okay, let's talk about Zoom. Everyone is using Zoom. I mean, almost everyone. And Zoom video communication is the biggest beneficiary of the global COVID-19 pandemic. Previously, 2 months ago, I was just talking about with every pandemic, there's always a loser, there's always a winner. Who are the winners in the market? And Zoom is definitely no doubt one of them. Now, millions of workers, students, they flock to this as governments worldwide, they mandated, right, work from home restrictions. Earning reports, okay, validated the investors extremely bullish on this stock. All right. Now, when I discuss with analysts and all, on the average, they are expecting the sales for Zoom to soar more than 300% in 2021 third quarter. Okay, that kind of growth can really make this California-based company one of the largest producer of growth among NASDAQ 100 companies. Okay, now when you look at the figures, you can see that, sorry, okay, year on year, as you compare, is a 40% increase compared to 2019. Okay, so that's why they are the biggest winner throughout this whole 2020. Okay, now in terms of the trend, it is still bullish yearly, quarterly, and monthly. All right. So when it comes to analyzing charts, I always want to keep it very simple. And of course, it has to make sense. So most of the time when I discuss with my investors, they some of the pitfalls I see is that they will have many indicators and on the charts, but when I ask about trading ideas, it's not solid, meaning it's not backed with strong fundamentals. And or either is more biased towards their own perception or gut feel, or maybe hear from friends. So my approach is always has been, you look at the big picture, all right, the big time frame, like monthly time frame, and then you scale it down to weekly and then you daily time frame to check the possible reversal in every period of study. All right, so here, for example, we see the past performance for 2020. It has been trending up steadily over the months. All right, now healthy reversal levels are cited with each waves, as you can see, those here that I've highlighted. Okay, now overall long-term reversal levels to watch out is 10950. All right, as mentioned earlier, overheated technology stocks performance is what we have been seeing. All right, so I would really, really prefer the market to cool off, all right, to 10950 before making any decision to go long into the market. All right, as you can see, yesterday closing is 12,528. So that's about 2,500 points away. So it's very, very overheated. All right, it's very, very overbought. I would say just let it cool down. Wait for next year as the market will start to just cool down a little bit, or when traders they take some profit. And then when it touches the bearish reversal levels, then we can start to look at going long into it. All right, but this is NASDAQ is something that I will propose that everyone here listening to look at, to study, and to keep track, because I would say the trading opportunity for NASDAQ is pretty high as compared to the rest. All right, so the next is E-mini S&P. All right, so S&P 500, we are looking at, yes, they are breaking records also. All right, they just recorded fresh record highs last Friday, even though it is usually very thin during Thanksgiving weekends. If you base on previous years. So so far, November is the best month for S&P 500 since 1950. All right. So on percentage basis, now S&P 500 is on track to have its best December actually since 1928. All right, so we see a 12% change from 2019 performance. For S&P 500, 12% change is pretty good. You know, we cannot compare to NASDAQ because S&P 500, we also have other assets classes like the banks and Exxon and Amazon and other companies. All right, so it's not technology focused. So of course the basket is wider. So 12% is actually quite good. Now S&P and of course the next one I'm going to talk about is Dow Jones. Now both of them, they are reporting record highs. So we will expect the equity market to keep swerving between gains on optimistic vaccine news and the pessimism about the ongoing escalation, all right, of the worst pandemic in the century. Now, the virus outbreak has pressured what could otherwise have been a V-shaped recovery. So a lot of things has been delayed due to the second, the third wave, the fourth wave, and the new lockdowns, so this will likely to continue to do so into 2021. So, but still, if you look at the charts, it's still bullish year on year, quarterly and monthly. All right. Now, going forward, investors might be winding down some of their position to take profit. So slight retracement is as expected. Okay. This is my bearish reversal level. Okay. Watch out at 3223. All right. Now, subsequently, if there is a chain of unforeseen market events and the market really sell down to 2983, then, this is something that we would need to look at, because probably I would say we can start to go long into if the market comes down to that kind of level. All right. Okay. Next is the Dow Jones, as I mentioned just now. All right. Still, December has been the best month since 1987. All right. Now, this oldest US stocks index also crossed the 30,000 milestone for the first time in early November. So now Dow Jones reported a 3% positive change from 2019 performance, which is really, really good. Okay. So now, we look at similar trend movement recorded in the NASDAQ, S&P 500, and also the Dow Jones, right? And of course, we will understand that investors might want to wind down some of their positions. So that's why I always say let the market cool down first before we hopped in. But I'm more bullish bias, so I will tend to look at opportunity to go long. All right. So during for these three indices, I just want to take this opportunity to pause here for a while and just give you my opinion. Because you have seen the charts. It's been trending up very healthily in the midst of the pandemic situation. All right, and so a lot of my customers and even investors, they have been asking me like, why is it the markets, why are they trending up? Is it really based on solid performance or what? Now if you're worried about whether the looming government shutdown in US would slow down US stocks performance, you can really take comfort in history, because from what I researched, markets tend to struck off these kind of shutdowns despite their potentially nasty economic impact, right? So since 1984, S&P 500 has averaged about 1.3% gain during government shutdown. Okay, so government shutdown is not new, as and when, all right? So it's in US. So the most recent shutdown, which lasted for 5 weeks, all right, they only shave off only about 0.2% from the real US GDP in the fourth quarter in 2018 and the first quarter in 2019. Okay, so it did not do much to deter stocks. In fact, S&P was rising more than 9% during that period. Okay, so you don't need to be too concerned about the performance, because for S&P 500, Nasdaq 100, and the Dow Jones, essentially the investors, they are looking past the bleak economic data. All right, the main focus right now, like I mentioned earlier, the three key drivers that is driving the market is really the COVID-19 virus, the vaccine development. All right, of course, the two other drivers is the US-China tensions and what is going to happen for the US president. Okay, so next we just move on to crude oil. Okay, now Brent crude, for investors who are trading Brent crude oil, so far what we gather is that OPEC will try to hammer out a deal on extending production cuts, all right, and basically, of course, get their act together. Now, the oil market has widely priced in about 3-month extension, all right, while holding out on a hope for a more dramatic OPEC surprise cut. Okay, so after the initial rounds of talk, the group is now considering to roll over the existing cuts about 7.7 million barrels a day. So that's about 8% of the global market supply. And they will roll over this into the first months into the 2021. So that's why you can see the CFD Brent crude oil right now is currently quite supported for now. All right, year-on-year performance-wise, crude oil recorded a negative 25% drop as compared to 2019. All right, so with no new surprises from OPEC, the prices will just remain in the range from now until at least probably March. Okay, so spot gold. Yes, a lot of people like to ask me about this market. So let me just go through this. For the spot gold market, gold is coming off, probably for its third consecutive losing week. And the loss is almost about 6% through November, December. Now, investors sold off this safe haven asset and poured into riskier investments like stock. Why? Because of positive vaccines developments. All right, so now gold recorded a 20% positive change as compared to the 2019 performance. So you see that it's cooling off slightly. Okay, all right, over here also. And investors now, they appear to be less focused on, the renewed surge of COVID-19 cases around the world, all right, or new lockdowns in places like London, Hong Kong, Canada. All right, but instead they are paying more attention to the likely approval of multiple COVID-19 vaccines in the coming weeks, as I mentioned to you earlier on. All right, so the gold investors have also taken the lead from testimony from the US Federal Reserve Chairman, Jerome Powell, and the Treasury Secretary, Steve, and both of them, they said that the US economy is on the path to recovery, but of course we'll need some help. So when they say some help, we know that yes, they are going to push in economic stimulus, but however, how much it is, we won't know. Still, with that, more money means that they will be able to move into, to help the companies, small businesses, and even the citizens. So as well, you can see that the US stocks will continue to be bullish. All right. So the next federal meeting will be on December 15-16. So take note and see where their direction is for 2021. All right, so for me right now, for the medium term analysis is that gold is still bullish year on year, quarterly. Monthly is not. All right, why? Is because we are seeing slight pullback when they pull out their funds and put it into riskier assets. All right, now it's still bullish, even though it has already recorded 6% loss in November. And the thing is, markets might be pricing in the positive COVID-19 vaccine developments. So if the gold prices able to come off until my first monthly bearish reversal, which is 1699, okay, I'll be looking for the opportunity to go long, right? So if you follow my last update 2 months ago, you will know that I'm bullish bias because on the fact that global governments, they are still injecting stimulus. In fact, if you look at the GDP, it's not even enough. Even though it's positive, but it's still not enough. Like even US Federal Reserve, Jerome, he was saying that, the economy still needs some help. So we will already expected that they will be injecting stimulus into their economies to cope the pandemic. And of course, all these stimulus, right? You can't just print money without having any consequences. So it has to come with a price. For that, I will still say that I'm still bullish bias. So we will continue to see that countries will, they have already reported the third wave, the fourth wave. So that's why in my opinion, gold will still continue to shine in 2021. All right. So let me just take a break and just ask if you do have any questions. Okay, I'll be looking at the chat box now. Let me see. Okay, yes. I have one from Ms. Lim. NASDAQ slides, right? Okay, just let me move back. This one, yeah. This one I highly recommend. All right. I'm still waiting for some questions coming in. Yeah, thank you for your questions. Just continue to send them in. All right. Okay. All right. So, let me just, talk about a little bit on NASDAQ 100. I am really focusing on this. Even when I do my market updates with my investors, this is the one that I am monitoring. I've already been in the market, so, I would say that it is still very, very positive. As you know, technology stocks, they are not going to lighten out anytime soon. So, in Philip Futures, we do offer those CFDs shares, stocks, individual stocks like Amazon and all that. You can actually take a look and see if you are able to tap into the market. In the ballpark, technology stocks will continue to increase in the stock value, and but if you are trying to get in now, it's a bit you just need to wait for it to cool off a little bit. Okay, and specifically, when I do my market updates, I will be sharing more of the levels with my investors, in a sense, where to really go in. Okay, let me see. Okay, from Glenn, which sector do you think will flourish next? Like I mentioned to you, technology. If you say it's sector by itself, I will really, really recommend that everyone, you start to look at green technology. This is the main focus. All governments, they have been really, really talking about green, going green. We are, have using technology. we are really reducing, like, they are talking about like paperless and, a lot of things. So the green technology, the green sector, anything, any company that is focusing on recycling and really using, the materials for, making stuff, you should look at the green technologies, which I'm actually studying right now. So I will share more in my market updates. All right, next is for, let me see. Okay, let me see. Resistance and support line for gold. Okay, let me just go back. All right, it's here. 1699 is the support. Yesterday closing was 1866. All right, it's still bullish. Monthly recorded bearish, but you also need to understand that, gold came a long way from 1459 all the way to 2000 plus. So the drop is pretty, it is only about 30%. So it's pretty insignificant to me. And therefore, I will still be very bullish bias. Okay, all right. So support is 1699. Okay, let me see. Where do you see S&P 500 and Dow Jones end of 2021? From Rick. Good question. Now for yeah, so S&P and Dow Jones, most of the time they move together, all right. And the difference is, S&P 500 is the 500 top fortune companies, whereas Dow Jones is more diversified with the 30 capital cap sectors company. So the difference is very, very slight in terms of the performance, because quite a majority of the companies, the ones that hold the major cap is represented in S&P 500 and also in the Dow Jones. So we can see that the movement is very on par together. I would say that in 2021, at the end of 2021 is very, very early to say, because if you remember the three key drivers that I mentioned to you, number one, vaccine development. If more companies, as we speak, right, I do have a lot of news coming in, like some of the companies, they are having very, very positive effectiveness. So which means that we can see more developments coming in, and very, very close to in March 2021, we can see that probably they can distribute it if according to the timeline they are able to produce and distribute at this time. Okay, so in terms of S&P 500 and Dow Jones, if the stimulus takes place, like the US Federal Reserve, if they mention about it on 15 December, and also, of course, let's not forget about Joe Biden's policy. He was also talking about stimulus and pumping in, money for investment for those technology companies and green companies that is already listed on S&P 500 and Dow Jones. So you see that actually S&P 500 and Dow Jones, they will continue to go up. All right. In between, yes, we do know that it goes in waves. All right, it moves in waves. So naturally, investors, they will take profit. Okay, and so I would say that so far, to me, S&P and Dow Jones, they are looking at very, I would say, positive bullishness into even March, unless, of course, they decided to, something unforeseen happen, then that's something we can't really expect lah. Okay. Semiconductor stocks. Okay, Stephen Fu here, he's asking about what sectors are you bullish apart from technology. Semiconductor stocks, yes, also. You can look into that. But however, of course, the thing is, like I mentioned earlier, green technologies. All right, semiconductor has been quite soft, and it's only, yeah, it has been pretty much quite soft. So if you want, you can actually look into the green companies. All right. Let me see. What recovery stock would you recommend? Basically, I'm only focusing on the equity indices, US, S&P 500, gold, and oil. So this I will have to email you, all right, to explain to you further. All right. Okay, Casey Chu, if I'm not wrong. Okay, what are your views regarding dollar index? Okay, now dollar index, it's as you know that the stimulus, okay, they are proposing to pump in more money. So we will see that there's a USD weak softening. So you can expect that more of the funds will be flowing into riskier assets like stocks. Okay, so if you are trading dollar index, you probably will know that if you want to, I would say, if you want to buy dollar index right now, currently I think, let me just pull out the chart, dollar index. Yeah, so like what I mentioned to you, dollar index is not really going anywhere. It has dropped, of course, due to the stimulus and all that, but it's just in a range. So nothing much about for dollar index. Predominantly, what is really focusing, the key focus right now is really the vaccines. And because of the new developments, you will see that a lot of the investors, renew hopes of, stocks rising up again, and also, of course, the economic performance coming up again. So this is, I would say that focus on the indices more than dollar index per se. Okay. All right. Okay. Now, okay, let's just move on. I will then continue with the questions later. Okay, so now let's look at the contract specification. Now I was talking about like NASDAQ 100. These are, and S&P 500, Dow Jones 30. What are all these? These are actually CFDs. So essentially CFDs, what is really CFDs? Essentially, they are derivative products from a base market like a futures market or cash market. So the main difference between futures, cash, CFD markets is the contract size. So why I recommend CFD NASDAQ 100 and not futures NASDAQ 100 for tonight's session is simply because of the contract size. Now, I do understand that investors, they want small contract size, all right, to get themselves familiarized with the mechanics of the market, the movement of the markets, as well as to build their trading strategies. All right. So, and another reason that I gather from my investors is that, it's the ease of exiting these contracts. Now, CFDs, they are less complicated as compared to their futures counterpart, where you need to take note of the active months, contract expiry dates. All right. So now what you are looking at is the contract specification for CFD and also spot. Essentially, they works the same. So when you trade one, for example, CFD NASDAQ contract, the contract size is USD $1 times the index price. For example, maybe 12,500. Okay, so instead of paying USD 12,500 to Philip Futures, we only require 10% of the contract value as a deposit. So 10% is about USD 1,250. All right, next is trading hours is according to the Singapore time, 1 a.m. to 12 a.m. for CFD, and spot go is 6 a.m. to 5 a.m. All right, dollar value of 1 point is actually your profit and loss. Okay, so what I mean is that every 1 point movement is USD $1 profit or loss in your account. Okay, so CFD and spot go, they are offered on MT5. So there's no commission, it's zero. So yes, margin required. CFD is a leverage product. So meaning that you need to deposit. All right, so this deposit is called the margin. All right, so for CFDs, it's 10% of the contract value into your trading account. Okay, so you need to deposit this 10% of the contract value into your trading account before you can start trading. Okay, and it will be locked up by the system when you start trading. So for this example, to trade one CFD Nasdaq is you take 10% of the contract value, which is USD 1250. All right, and you need to have this amount in your account before you can even trade or buy or sell one CFD Nasdaq. All right, so for gold is 20%. All right, of the contract value. Okay, so once you close off your position, you take your profit already, the deposit will be released back into your account. Okay, so let me just go through fundamental analysis right now. What do you need to look out for if you are looking at other markets? Okay, basically, you need to know your news. All right, and what are the breaking news for the day? Which basket is moving? Is it the equity indices? Is it commodities? Is it currencies? All right, so as mentioned earlier on the key drivers for market performance, you need to check the news pertaining to those key drivers. So any more news on the development of vaccines or, any heightened new geopolitical tension, especially US-China, which recently there are new tensions between the US and China again. All right, so all these things you need to know, and the implication into the markets. All right, because essentially it's investors, they are the ones that are trading these stocks. So whenever government they inject stimulus into the economy, stock market will continue to keep going up, all right, because more money will flow into riskier assets, right? It's not like looking at safe haven. So you might be wondering, like for example, like the gold market that I showed you just now. Okay, it should continue to move higher, right? Because USD weakness. All right, that's true because it's gold using USD to trade gold. So if there's USD weakness, gold should go up. But however, you need to bear in mind the key drivers for the market. Like I mentioned, it's right now everyone is just looking at positive vaccine development. All right, this thing far outweighs everything. Okay, whether it's a poor economic data, or government is pumping in too much money or things like that, However, because the investors, they are very focused on positive vaccine developments. So that's why you see that gold is coming off and the stock market is skyrocketing. Okay, so next thing is that markets, okay, which markets are reporting big movements? All right, then you streamline, you look at the news on why these movements are happening. All right, now the next piece of research to gather is economic data, concerning the product you are trading. All right, so I'll elaborate on this, but however, I just want to let you know that for me, not only I do the market update on Zoom with my clients and investors, then also on a daily basis, I will gather all the breaking news and piece them together, and coupled with analysis of what is going on and what will possibly happen in the near future. And of course, I will blast them out to the clients and traders to assist them in their fundamental research. Okay, because I do understand that, you know, especially for new investors, it's very frustrating because you tell me to look at news, but go where and look at news and what news and where to focus on, you know. So, you know, so far I would say that the new investors that come on board, they have feedback that they are able to learn through my market reports, you know, and they know that, you know, right now they know how to pinpoint which economic data is more important, and which one hold more weight to the product of interest that they are trading. Okay, so as you can see, for the economic data, all right, because we are looking at US products, so definitely you need to know jobs data. All right, US jobless claims, more claims, more jobless. More jobless means less spending and affecting the economy as a whole. All right, and this will spiral down further. All right, so another piece of research you need to add to your fundamental analysis is to take note central bank meeting, which I mentioned to you. The upcoming one is on December 15, 16. So we need to know what Jerome is going to discuss and his outlook for the months ahead. All right, and market is already expecting that he will propose stimulus, but how much we won't know. Okay, cutting rates, we won't be expecting him to be mentioning that, but if he would mention cutting rates, it will be quite a surprise, and you can see some movement in the market. All right, so a lot of times is about understanding the expectation of the investors already, as well as the actual results. Okay, so the next thing also is good to pay attention on their allies, which is the European Central Bank meetings, the Bank of England, Bank of Japan policy meetings. Okay, because, you know, if for Europe side is quite bad right now, so, you know, for me, I will believe that the first probably down wave will start at Europe, and then it will start to move into US much later. Yeah, but for the Europe side, you know, because they have been already pumping a lot of money into the economy, and it's really not really helping that much yet. So I would say that, you know, if Europe continue to do that, you know, Bank of England might try, you know, they might consider. Bank of Japan, we have not heard anything nor expect anything yet. So, you know, with that, we can kind of understand that probably for euros is going to be very, very weak, you know, and for the upcoming months also. Okay. Okay. So any more questions before I can just round up this market outlook for 2021? Essentially, I would say that, as I mentioned to you earlier on, just focus on NASDAQ, look at it. Of course, look at green technology stocks, green companies also. All right, these will take the majority of the movement in 2021. Okay. Right, so just flow in your questions. I'll just continue to answer them. Okay, demo to execute one transaction from Mr. Tang, if I'm not wrong. Okay, let me just show you how it looks like on the MT5. Okay, so over here, you can see that I'll try to make this as big as possible. Okay, so this is all currencies. Okay, And this is gold, NASDAQ, S&P 500, Dow Jones, UK oil. Okay, so let me just show you. So say for example, this is daily. So this is the time frame. You can just change on the daily basis, and you can look on the timeline over here. Yeah. Okay. Now, you can actually do your lines, all right, as I mentioned, showed early on, just draw your lines. These are your support and resistance lines, okay? And let me just demo. Okay, so you can just right click, new order, all right? Or you can click on the chart, okay? Either a sell limit or trading, okay? So you can do that. You can click on the chart, or you can just do it here, new order. So new order, you will have this, okay, telling you exchange execution is immediately. That means you take what the market offers, okay? So if you want like lower than market, you put pending order, okay? Then your type will change to buy limit, all right? And then you just key in the price over here, all right? So the volume, take note, is 0.01, which means it's 1 ounce. Okay, so if you want 10 ounce, you have to change it to 10, 0.10. All right, so probably, maybe I want to buy much lower, maybe let's do 1850. Okay, and I can put in a stop loss, or I can later put in the stop loss, not an issue. So I just place the order. Okay, so you just, okay, so you'll be show up here. So it's pending, is working in the system. So say for example, I want to buy now. Okay, so I just go in, I just take whatever the market is offering, and it's done. It's done here, and you can see over here is, yeah, over here. I bought 10 ounces at this price, market price, all right, and at this time. Okay, so this is still working, all right? So you just need to exit if you don't want to, okay? Okay, accept the terms and condition and press OK. So of course, you will see that, now they can show you the profit and loss and all that. So if you want to take profit, or you just want to quickly cut loss, just exit here. It's done. Okay. So it's very, very straightforward. It's even easier on the mobile phone. And all right. And if let's say you are into, programming, I have friends that are programmers, and they can really program very simple programs, like do your own automated trading. You can do that, and you can upload into this MT5. And this is the one that we are using for a lot of our presentation, because this one can really load quite a number of programs into this software. So it's really, really useful. Okay, and one more good part is that I really do like is that, say for example, I can do a buy and I can do a sell, and I have two here. So you see, they do not knock off each other. They are separated. So, at any point in time, if anyone is in profit, I just take profit. All right. Okay. So I can yeah, just do that. Which this is very good for hedge position. So this is the same for S&P 500, Dow Jones, UK oil. It works the same. Okay, very straightforward. There's a Horace Tan. Can I transfer my training account to you? I'll leave that to my staff. They can help me to collate everything. Most of the time, I do have a lot of people asking me these questions, but we have to go through the proper channel. All right. So there's this from let me see. Mr. Stephen Fu, Nasdaq keep hitting all-time high. What are the opportunities for retracement, and what possibly can cause it? Okay, what possibly can cause it? Like I said, it's pretty much for the market to cool down. And let me just pull out the chart for Nasdaq here. Okay, just do a fast one. Okay. Okay, now as you can see, this looks scary now because it's 1 hour. Okay, right. See, if you look at this, all right, the trend is very, very bullish. And the thing is, for you to go in now is very difficult, all right, because it's breaking all-time high. What will possibly cause it to come down? Okay, it's, to me, in my opinion, is the US president debate. I mean, not say debate, but the problems that they are facing. You know, if you recall, in 2018, there's a government shutdown. You know, and I think that in 2021, if it's not a very successful transfer of, you know, power over to Joe Biden, you know, it's going to really shake the market a little bit. Now, a little bit only, because essentially, you know, investors, they will, it's always like a knee-jerk reaction, you know, when the US president, you know, they don't settle the thing amicably, you know. So knee-jerk reaction, yes, it will come down, definitely, but if it comes down, go in, all right? For me, okay, because I usually give a very long-term, because it's a market update, so it's a very long-term one, as I can show you right now, all right, this one. But if, let's say, it comes down to here, I mean, I'm already in the market like around here, but if it comes down to here, okay, I will look for opportunities. Now, bear in mind, this proposition is only can last for until January. If this level is not hit, okay, just forget about it. Relook at it again, because essentially we have fresh news coming in. You know, investors, they are keep adjusting to the ever-changing markets. Okay, so if nothing is, you know, nothing new or whatever, and the market just coming off because of, you know, really very overheated, and some maybe just taking profit, you know. So if they take profit, probably, you know, it's just around here, you know. But if it's able to like come down here or here, you know, I will just go in a little bit. But for this, it's very, very short term. So I do not know how's your view, you know, are you looking at a quarterly based type of investment, or, you know, you're just looking at day to day? You know, of course, day to day, definitely much shorter levels. All right. So this is what I recommend. So if you're looking at for weeks, just for weeks, probably a 500 point down, you can start to buy. All right, around this 12050. Okay, let me see what else. You mentioned you have market updates for us. How do we subscribe to them? Okay, simply I will do a market update every 2 months, and but my bi-weekly market update, if you are referring to that one, is solely for my investors where they open an account with us. Okay, so if you are looking at, you know, if you do not have any account with us, you can actually look at, you know, opening an account. So simply you just need to register for the account, which is over here. Okay, just scan the QR code here. Okay, and then you use your My Info to fill out the application. So once it's done, your account is, you know, done, you know, you can start to fund your account. So we do not ask for minimum deposit anymore. You know, it used to be that case, but right now, you know, we just do away because it's so troublesome, right? You know, just open your account. If you want to trade, you just put in the money. Simple, straightforward, which I love it. You know, so, you know, if you want to be part of the market update group that I mentioned, the bi-weekly one, simply just, you know, open an account with us and with me actually, then I will add you into my Zoom invite every 2 weeks, you know, and you see whether you are able to attend. Okay, let me see. I'm actually overrun already, but let me just finish one more question from Mr. Fu. Okay, how about pharma vaccine stocks, Pfizer, Johnson & Johnson? Okay, very good questions. Okay, these stocks are very high. Okay, if you go and take a look at Johnson & Johnson, Pfizer, in fact, don't talk about Moderna. It just shoot up like at least about 200% because they are the first to, you know, get the approval. So it's very overheated, I would say, pharma vaccine stocks, you know. So if you want to jump into the game right now, it's a bit too late. But of course, I would say that look at the rest, okay, that I mentioned to you and see that if there's any opportunity with the rest, which I can just flash it out to you again, this one, okay. Yeah, yeah. I mean, the ones that you asked, Pfizer, Johnson and Johnson, the prices is already way past the buying stage already. So probably you just need to, you know, wait for it to cool down also. Okay. All right. So thank you so much for all your questions. Okay. If you still need some time to scan in your account, just do so. All right. So a recording of tonight's webinar, all right, will be emailed to you probably tomorrow. And some of your questions about, you know, can I transfer my account over to you or not? This one, my staff, they will handle it tomorrow. So give us some time because I have a lot of questions that I have to reply directly, you know, through email. So so if you still have any more questions, okay, I will still continue to reply you directly to the email that you registered with us. Okay, so I will just sign off for tonight. So thank you for attending this webinar. I trust that this is very, very fruitful to you. Look forward to my next 2-month update, market update again. All right, thank you so much. I'll talk to you again. Thank you.